There's two major downsides of buying cheap car insurance, and let's go over some of the examples and how that affects you directly. So when you're buying cheap car insurance, you can get cheap car insurance through the right companies. A lot of that's built off of the profile, and we'll dive into that a little bit further. But initially, the first reason buying cheap car insurance is going to affect you is not having the correct coverage. In order to get the prices low, I'm actually working with this through a customer now, and it's not affordable. The rates have gone up, and there's just not a better option. So we look at different companies, but we also look at how do we change the price? Can we raise the deductibles? Can we lower the liability limits? Can we pull off the rental car coverage? Can we pull off the towing and road service? Do they really need a savings bank anymore? And the answer is yes, we should have all of these things. Unfortunately, the new norm is starting to become increased rates over the last 12 months and going into 2024 and beyond. To infinity and beyond. Okay, so the other part is that when you downgrade, you got to think of the cost, right? So the average cost of car insurance without having the extras, the comprehensive and the collision, they call it comprehensive or full coverage as some people call it. That policy, just bare bones, with the right coverages, is going to cost you about $1,200 a year. So about $100 a month. For some states, it's even less than that. Other states, it can vary within 20%, we'll say. $80 to $120-ish per month. When you switch over to having the comprehensive and collision, depending on the car, we got a video that I'll link at the end that kind of explains that part, but depending on the vehicle and the profile and all of that, you're looking almost $3,000 per year, which is between $250 and $320 per month. That's pretty significant. That's over double the cost to have the full coverage option versus having the standard liability. Now, it depends on the state as well, because some states like Ohio or Texas, the higher liability limits, the impact on the price is going to be more significant. For companies like Michigan, where they don't care as much about the liability because they have something called personal injury protection. The medical is already taken care of to a point. There's some nuances that I got 100 videos on that. But the cost to increase those limits, most people carry the highest coverage there because it's just not expensive. The policy is expensive in general, but increasing those limits is not the part that costs. It's the comprehensive and the collision and the personal injury protection limits. Those are the three main things there, where here, just having the liability part higher can double the price. Now, adding the comprehensive on and adding the collision on can increase as well. States like Florida, if you add comprehensive, it's way more expensive because they have more glass claims. They have more damage from other than collisions. Same thing for Texas. Michigan, not so much. Actually, Michigan is a little bit high because they've got the snow and yeah, there's a lot of reasons for that. But Ohio will say it's not as expensive because they don't have as much or harsh of weather conditions that are going to affect that policy. The second biggest downside of having cheap car insurance is the ability of the company to do claims. There's usually a reason things are cheaper. And in insurance specifically, you get what you pay for 75% of the time. There are some companies that in between have some good fits. We'll talk about those in just a second. The point I'm trying to make is claims process is almost double, if not triple, with the cheaper companies than they are with the good companies. Now, newer companies, as they're trying to come up and become a really good company, that's a different scenario. I've had comments in here, you never talk about the small guys, because the small guys never show up on the radar, one, but two, they're only in a couple states. So companies like Westfield, they're only in 4 or 5 different states, and they're a really good company, not taking on a ton of new business because their rates have gone crazy. They've felt the same pain as your State Farm and all states as well. But they used to be, and probably will be again, really competitive in those 5 or 6 states that they're really good at. Companies like Cure, they're trying to take over the high risk in Michigan. At least that's what I always see them competitive with. And they are only in a couple different states as well. So those companies for higher risks, they can fit in that scenario a lot better, but they have to stay local and they have to stay small because they want to have that fingerprint on the pricing model. They can't afford to go wide and big and take on too many customers because those companies just can't afford the claims that are coming with that. So Mark, how do I get the mix of it? How do I get that even playing field where I get just enough coverage, but I don't get a lot of bad issues with claims and all of that stuff? Because it's not just claims. It's one, the length of time to fix a claim, but two, it's also the coverage you get for the claim, and three, it's also the service that you get with that claim. The customer service is usually a little bit overwhelmed. There's not as many service reps. Your wait times are way longer. There's no AI built into it because they can't afford to do that, which can solve and pay out claims quickly. There's just those growing pains that no customer wants to have, but they understand price is part of what you're paying for. The biggest way to combat that is to understand the profile of you. You specifically determine who's going to be competitive and who's not. Now, I get the point that the industry's on fire right now and half the companies don't want a person and half the companies do. That means you need to take some extra steps to get the companies that aren't just cheap. You want the cheap and the good mixed together. So those companies are going to make you jump through hoops to eliminate the people that are honestly just too lazy to do it. They're going to need a copy of the registration of your car without a ton of complaints. That agent isn't going to spend a lot of time if you're just like, what's the point? You're just going to complain all the way through. So, well, I'm not that guy. Like, if that's the if that's the way you're going to treat me, is going to treat my staff, it's not worth it. Going through getting the registration, having proof that you own the car, not just technically that it's the registration, but having proof that you have insurance for X amount of years. Having pictures of the car might make a sense. And if it's with your home, having pictures of the home, all four sides, the roof, the address, all the things that they want. They want the deed. They want to see proof that you own it. They want to see how many people live in the house. There's all of these steps that we normally didn't have to take, that in order to keep you with those really competitive companies, you may have to take those steps. Now, that doesn't mean that they're always going to be the best priced company. It really just depends on that fit. Once again, it's you. It's the profile. What's your claims history? What kind of cars do you have? What's your risk? Where do you live? All of the things, the insurance score that they've given you. All of that's mixed into what I call a profile, and then those agents take it out and plug them into different models. That's why that once and done doesn't work as much anymore. You used to be, you get on the phone and I would just sell you right then and there. Here's da, 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 da. Half the time, the companies that are really competitive and really good don't even show up anymore. They're just, we'll wait a little bit. We want the customer, but we don't want to necessarily just show it to everyone. It's kind of that hidden secret that you need the passcode to get in. That passcode is an independent agent. If you are shopping for that type of insurance, you're looking for a decent price, but you're looking for the coverage as well with it. I'll put a link in the description below where you can work with an independent agent who can take that profile, plug it into 10, 15, 20 different companies, and at least find the company that's the best fit for you. Typically, the best fit is going to get you the best price mixed with the best coverage. So the first thing that you need to understand is what coverages do you need? If you're not familiar with car insurance coverage and what specifically you should carry, I've got a video that'll actually go a little bit more in depth on that as well. If you already know all that and you're like, also, what discounts can I get when I do talk to them? Because I want to make sure I'm getting the best deal. I've got a discount video here that will go a lot more in depth as well. I'm Mark with Think Insurance. I'll see you in the next one.